Hello everyone. Let us calculate the income from other sources of R. Lakshmi. So in this case, they have given you the various investment made by her. So the first one is dividend from an Indian company, so it will be exempted from tax as the amount is less than rupees 10 lakhs. Then the examinationship remuneration will be taxable. Then royalty by the publication of a book, this will be taxable. Then winning from lotteries, they have give you the net amount, so you have to gross it out. And for winning from lotteries, if the prize money is in excess of rupees 10,000, then there's a TDS of 30%. So it means that this winning from lottery for rupees 35,000 is after the deduction of tax of 30% since the net amount has been given. Then for point number 5, you have rupees 40,000 10% debenture of company, that will be taxable. Then 40,000 12% Punjab government security, that also be taxable. Then 50,000 30% less tax commercial security, that also will be taxable. Then we have this number 8, it says rupees 40,000 10% tax free debenture of a company unlisted. But now if you look from the paragraph after point number 9, it says that on October 2019, she sold the investment or the above investment of rupees 40,000, 10% tax-free debenture of a company for rupees 45,000. So it means that the point number 8, the investment made in 40,000, 10% tax-free debenture has been sold off on October 2019, and she has been selling it at rupees 45,000. So remember, this profit that she made will be taxable under the head capital gain. So now in this case, you have to remember here, we know that the interest on the above security, it means that see from the last you can see from the last sentence of the paragraph, it says that interest on above security falls due on December 31st of every year. Now point to be noted here is that for the investment of rupees 40,000 10% tax free debenture, we need not calculate interest for the current previous year since this investment has been sold off before the due date of interest. So I'll repeat again, for point number 8, that is rupees 40,000 10% tax free debenture, this security has been sold off before the due date of interest, that is it has been sold off in October 2019 and the due date of interest is on 31st December of the current previous year. So since it has been sold off before the due date of interest, so no interest will be calculated for the current previous year. Then if you look again at the second sentence of the last paragraph, it says that in December 2019, she inherited rupees 63,000, 10% tax-free debenture that is listed of XY Company Limited from her father. So this also will be taxable, but the point to be noted here again is that she received the or she inherited the debenture, tax-free debenture from her father prior to the due date of interest. So she received on December 2019. So since the date has not been given, so we assume that she has received prior to 31st December. So since he has received prior to the due date of interest, so interest will be calculated for one full year since also the interest is payable once in a year. So the point to be noted here is that you have to calculate the charges for interest and dividend at the rate of 2% of the net amount. Remember, it's net amount. Then purchase of lottery ticket is rupees 2,000. That is the expenses for the purchase of lottery ticket is rupees 2,000. So there will be no deduction allowed for the purchase of lottery ticket from the winning from lottery. So let us look at the solution. Now here, so in this solution, I have divided the income into general incomes under section 56.1 and also the specific income under section 56.2. So for the general income, we royalty from books, so that will be taxable, that is 48,000 if you look from the problem. And the exam, the remuneration is rupees 2,000. So the general income will be the royalty from books 40,000 and the examination remuneration rupees 2,000. So it will be in total rupees 50,000. Then now if you look at the specific incomes under section 56.2, so dividend both on preference shares and equity shares from an Indian company will be exempted. Then point number 2 is winning from lottery. Okay, so if you look from this problem, point number 4, it says that winnings from lottery, it is a net amount. So I'll repeat again, if the amount is in excess of rupees 10,000 or the prize money is in excess of rupees 10,000, then there's a TDS of 30%. So it means that there is a tax deductible at source at 30% of the prize money. So in this case, I have given a net amount, then you have to gross it up. So if you have to gross it up, it will be rupees 35,000 into 100, then divided by 70. So it's this 70, you will get the formula is 100 100 minus the rate of tax. So 100 minus 30%, you'll get 70. So 35,000 into 100 divided by 70 will give 50,000. So it means that the total amount of winning from lottery is 50,000. There's a TDS of 30%. So what the assessee has been received is only 35,000. But remember, if you have to calculate the income from other sources, or the taxable income from other sources, you have to give, or you have to show the gross amount, or you have to calculate the gross amount. So for interest on security, you can see that there are four columns, that is interest due on, then the gross interest, then the rate of TDS, and the TDS. The TDS column has been shown so as to get the net interest and dividend received, as the collection charges has to be calculated on the on the net amount realized. So you can see from point number 1, it says that interest and dividend at the rate of 2% of the net amount realized. Now let us look at the first investment, that is rupees 40,000, 10% unlisted debenture. So we know there's a TDS of 10%, but since the amount of investment has been given, that is the face value of investment is 40,000 and the rate of interest has been given, so to calculate the gross amount, no need to gross it up, it will be 40,000 into 10%, you'll get 4,000, and the TDS is 10%, so TDS will be 400. Then in the case of government securities, so there's no TDS, so whatever the amount you're calculating will be rupees, or will be the gross amount, that is rupees 4,800. There's no TDS, so TDS will be nil. Then in the case of commercial security also, there's a TDS of 10%, but since the face value has been given and the rate of interest has been given, so if you calculate, you'll get the gross amount. So the gross amount will be 6,500, that is 13% of rupees 50,000. Then the TDS is 10%, so 10% of 6,500 is 650. Then in the case of tax-free debenture, so remember, in the case of tax-free debenture, whether the amount of interest is given or the face value has been given, it is always to be grossed up. So now if you look from the next slide, from the next slide, so for rupees 63,000, 10% tax-free debenture, that is listed debenture of XY company. So first of all, you calculate the net interest. So the net interest will be 63,000 into 10%, it'll be 6,300, and then you have to gross it up. So if you have to gross it up, you take the net interest. So the net interest is 6,300 into 100, then divided by 100 minus 10. So if you see from the above formula for the gross amount, is this net interest received into 100 divided by 100 minus the rate of tax. So the rate of tax here is 10%, so 100 minus 10 will get 19. Will get 90. So the gross interest will be 63,000 into 100 divided by 90. So the gross interest is 7,000. So that is why if you look here, the gross interest on the 63,000 10% tax-free debenture, it is rupees 7,000. Then we also have the last one, that is point number 9. It says rupees 5,400 as interest on tax-free debentures. Remember, as I've told you, in the case of tax-free security, whether the face value is given or the interest received has been given, you always have to gross. Then in this case, the amount of 5,400 is the net interest, so you have to gross it up, and the TDS here is 10%, so you can see that. So you can see for the interest received on 5,400, so this is the net interest, so you have to gross it up. So to gross it up, we'll have 5,400 into 100 divided by 90. So this 90 is 100 minus 10, that is the rate of tax, so you'll get 90. So after calculating, you'll get 6,000. So since the TDS is 10%, so 10% of 6,000 will get 600. So the gross interest is 28,300. So you can see, so the gross income from other source is 1,28,300. So to calculate the collection charges, you have to get the net interest. So to get the net interest will be the gross interest minus the TDS. So that's why you can see that 28,300 minus 2,350. So you take 2% of that, you'll get 519. So it means that the collection charges is 519. So income from other sources will be 1,27,781. So you can see from the note that there's no deduction of expenses on purchase of lottery tickets. Then point number 2, profit on sales of debenture is chargeable as capital gain. Then point number 3, it says in case of unlisted security, the TDS rate is 10%.